Michael Burry
made his name betting against the housing market.
It took 2 years for the drama to play out, but the subprime mortgage market finally collapsed in 2007.
When you hear about the year 2008, a lot comes into your mind, right? That year brings back a flood of memories, but one of the greatest things about that year is the 2008 financial crisis, which surely made its way through the world's history. Now, did you know that one man actually predicted this crisis to occur? That's right, and that man is none other than Michael Burry. But guess what? This genius dude is back with a fresh warning for 2023. We will dive into Burry's mind-blowing past predictions, uncover what he's saying about the current state of the economy, and actions you can take to survive the impending crisis. No doubt this video is your ultimate ticket to unravel the insights of a true financial wizard. So stick around till the end and let's see what Burry's got up his sleeve this time. Michael Burry is often hailed as a modern-day Cassandra and has a remarkable track record of accurate predictions. Back in 2005, he foresaw the impending burst of the real estate bubble, long before the 2008 financial crisis struck. His keen observations of mortgage lending practices led him to short the market and purchase credit default swaps, ultimately helping him and his investors avoid significant losses when the crisis hit.
What did you buy? I mean, you got out of everything else and bought credit default swaps betting against the housing market, right?
Right, we bought basically short $8.4 billion of credit default swaps related to mortgages or financial companies.
You must have been pretty confident that this thing was going to blow up.
Well, we had a giant bet for us, and I was extremely confident in the outcome.
Were your investors as confident?
I think a few investors were.
Some of them thought you were crazy. Some of them probably thought you'd lost your mind.
Burry's investment strategies and predictions have earned him immense respect in the financial world, and his ability to navigate through turbulent times to generate substantial profits, even during the darkest hours of the crisis, speaks volumes about his foresight and expertise. Now the financial guru is back in the spotlight with his dire warnings for the economy. Burry is not your typical straightforward forecaster. Nope. You'll find his cryptic tweets on Twitter, where he goes by the handle @MichaelJ.Burry. Or should we say the mysterious Cassandra BC. And the catch? He deletes his tweets shortly after posting them, adding an air of exclusivity and mystery. But don't worry, fans and tech-savvy folks have found ways to capture and share his insights through the Burry archive. His warnings may be cryptic, but they should not be taken lightly. With that said, several critical factors have captured the attention of Burry that have influenced his warnings, and one of which is the potential systemic risks within the banking sector. He's raised concerns about the dangers posed by complex financial instruments, lax regulation, and the interconnectedness of financial institutions. According to Burry, vulnerabilities within the banking sector could set off a chain reaction, leading to widespread financial instability. We got a taste of this when Silicon Valley Bank, a major player in funding technological innovations, was shut down by the state regulators on March 10, 2023. The bank experienced a significant drop in deposits, primarily due to rising interest rates. But this isn't an isolated incident. Other banks are facing similar challenges, and the closure of Silicon Valley Bank could be the start of a series of bank failures. The potential domino effect is a cause for concern. Another major factor behind Burry's warnings is rising inflation. He stirred up the Twitter world with a tweet that ignited conversations. Inflation peaked, but it's not the last peak of the cycle we are likely to see. CPI, or Consumer Price Index, lower, possibly negative in the second half of 2023. And the US is in recession by any definition. The Fed will cut and the government will stimulate, and we will have another inflation spike. It's not that hard. Despite the recent bank failures, the Federal Reserve has decided to push forward with its plan to increase interest rates. Burry acknowledges that while the highest inflation rate may have passed, it could cycle back to those levels in the future. In June 2022, we witnessed the highest inflation rate since the Great Recession, hitting a record high of 9.1%. In January 2023, the rate stood at 6.4%, dropping to 6% in February. However, Burry predicts that inflation might surge again to levels seen in June 2022 by the second half of this year. The recent banking crisis could be a contributing factor to this situation. While the collapse of the banks hasn't received widespread attention, it remains an ongoing issue with potentially significant implications for the economy. Burry's predictions have been on point so far. He correctly foresaw the increase in CPI CPI, but it might happen sooner than expected. In another tweet, he offered his perspective on Salesforce's job cuts, which generated media buzz. While many criticized Salesforce's decision to lay off employees during an economic downturn, Burry had a different take. He said, "CRM should have been down 25% on those job cuts. Job cuts are not the reason to own that." Burry's ability to identify underlying vulnerabilities and systemic risks has earned him the trust of the investment community. His dire warnings suggest that we may be on the verge of another major crisis, potentially surpassing the magnitude of the 2008 financial meltdown. So, what action should you take to survive this impending collapse? Surviving the impending collapse requires taking proactive measures. One strategy recommended by Burry is conducting a comprehensive risk assessment. This involves thoroughly analyzing your portfolio, identifying potential vulnerabilities, and diversifying your investments across different asset classes. By spreading your risk, you can mitigate the impact of financial crisis on your overall wealth. Reducing personal debt is another crucial step. Burry emphasizes the importance of lowering debt levels as it provides greater financial flexibility during times of crisis. Additionally, building adequate cash reserves is essential. Having cash on hand enables you to seize opportunities that may arise during a market downturn. But what do Burry's cryptic tweets have to do with this? On January 23, 2023, he shared a mysterious tweet featuring an ominous graph of the S&P 500. The graph showed a slight upward trend from September 2001 to March 2002, potentially indicating a peak before a downward trend. Burry's enigmatic tweet with the word "maybe" suggests that investors should consider selling their stocks, as this could be the last high before a downward spiral. This parallels the current situation we face, and his tweet may serve as a warning to investors. Exploring alternative investments is another strategy Burry advocates. Diversifying beyond traditional stocks and bonds can provide an extra layer of protection during turbulent times. Consider investments in commodities, precious metals, real estate, or other unconventional assets. What's more, staying informed and adaptive is another vital strategy. Remain updated on global economic trends, geopolitical developments, and market conditions. Stay connected to relevant financial news, seek out expert opinions, and be flexible in your investment strategies. Being able to adjust your approach to changing circumstances can make a significant difference. As the storm clouds gather on the economic horizon, taking these actions can help safeguard your financial well-being. But remember, Burry's warnings may hold critical insights. The question is, will you heed his advice and be prepared for what lies ahead? Thanks for watching, and see you in the next video.